What's up, guys? Welcome back to episode 6 of my M1 Finance account. I have not done a video in a long time, so I figure I'd just hurry up and try to do this video while I still have the time to do it. And I believe this is episode 6 of my M1 Finance account, and we're just gonna go through the account right quick and see what I've been doing. Have I made any new trades? What are some key differences to this video compared to my last video? But we're gonna dive right into it. And right now, the portfolio is sitting on about $19.17 gain for a 3% return, so about 3.85% return. So that's not bad. That's actually pretty good. I believe in the last video, I believe this account was around I would say about $500, maybe about 501. But everything's been going great with this Roth IRA. I love this Roth IRA. There's no maintenance needed. There's no maintenance needed for this Roth IRA. All I'm doing is I just buy and I just hold, and it's a superior strategy just to buy and hold stocks. And I know I'm going to get the dividend out of these stocks because everything in this account pays monthly. So I'm just going to go over through what I've been doing. There has been no differences from this video compared to the last video, but the account is really spiked up. I like what I'm seeing. I like the progress. I know that next month I'm going to get paid even more dividends, and then on July I'm going to get paid dividends. On August I'm going to pay dividends. So you guys kind of see my strategy. What I'm trying to do as far as compound interest, and holding on to these stocks. Even if they go down, even holding on to these ETFs and stocks, if they go down, I don't care. So what? Because I know I'm gonna get that dividend. So let's go through the account right quick. We have DIA. I think that's the Dow Jones Industrial Average ETF. $3.62 gain on them. Not bad. Apple Hospitality, I bought them at a pretty good dip for a $1.79 gain. Not too bad. It's one of my I like this real estate investment trust. These REITs, if you want to call them that, but it's a really solid stock if you can just buy a lot of these Apple Hospitality stocks and get paid a monthly dividend. Again, everything in my portfolio pays a monthly dividend. So we're gonna look at Gladstone Capital. So some of my favorite monthly dividend paying stocks: Gladstone, the Gladstone Corporation, Good, Gain, and Glad. I got a great average price. Average share price of about $8.72 for a $1.27 gain. Good. Gladstone Commercial Corporation, good. I'm up on them. My average share price $17.67. So when I bought these stocks and ETFs, they must have been all on their dips because I am really up on these stocks and ETFs right now. And here's Gain. Gain is actually one of my out of all the Gladstone stocks, Gain, Glad, and Good, I think Gain is my favorite one. Average share price $11.05 for a 4% return. I'm up 4%, almost 5% total return for Gladstone Investment Corporation Gain. So that's not too bad. The next stock, Main Street Capital. I think they deal with financial equities or something like that, but they do pay a monthly dividend, extremely attractive monthly dividend. I think I have some of this in my Robinhood portfolio, but right now, actually, I would actually say my M1 Finance account, as far as a percentage return, is doing very well, better than my Robinhood portfolio right now. Right now, my Robinhood portfolio is doing okay, but I have taken a hit a little bit with the Robinhood portfolio, only because I did some really risky plays with options. And again, like I said in episode 8 of my Robinhood portfolio, options is really risky. So it really account really put some things in perspective. It really just told me, hey, look, why did you stop, why did you stop with your investment strategy of just buying and holding stocks? I mean, that's investing 101 right there. You buy a stock while it's down, while everyone is selling out. When everyone is selling off, when everybody's panicking and getting out of these stocks, that's when you jump in. That is exactly the time you jump in. And some people might say, oh, well, you might be catching a double-edged sword. Well, yeah, the stock can keep going down. I mean, that's the risk that you take. That's the whole stock market is one big risk, and you want to reduce your chances. You want to reduce your chances with buying these stocks while they're low. It makes no sense to buy these stocks while they're high. I mean, I think this is the reason why. In my Robinhood portfolio, I ended up selling everything, guys. My whole Robinhood portfolio is totally different, and it's everything's gone, and it just looks different. And I'm gonna do a video on that, but right now we're gonna just focus on M1 Finance. This M1 Finance account, we're gonna jump into Pembina Pipeline Corporation, a Canadian energy stock that has just sprung up at a ridiculous price here. Average share price $30 for a $14.26 return, up 14% for this stock. This stock is energy stocks. The whole energy sector has had a really strong couple of weeks. I think even just a couple of strong weeks. These past few weeks that have been going by. I mean, the whole energy sector. We're talking about Chevron, Pembina Pipeline, Exxon Mobil. All these energy stocks have been doing super great, but they're commodities, and what goes up must come down. So you guys, hey, if you want to buy into the energy stock, this is. I remember on one of my episodes, I bought Valero. I got on the train. I said, you know what, I'm going to get on these energy stocks now while they're going up. No. Don't do it. That is a bad investment strategy. I caught myself. Sometimes I do this stuff. I catch myself, and like I said, I want to stick to one strategy. I don't like to do day trading that much. I don't like to do day trading. I don't even like to do swing trading. I like to buy and hold. Buy and hold is the best way to go. I don't have to check my portfolio like throughout the day. I just buy and I hold stocks for the long term, and that's the reason why I created this Roth IRA, because right now I'm up 14%, but in the next few months, the energy sector can start going back down again. It could start going back down just like in 2014 through 2015. The oil sector, the whole energy sector had it just tumbled down. All the energy stocks were at super buying points and hitting all-time lows, and it was just crazy. But we're going ahead to the last stock in this account, Reality Income. I'm up 5% on them. This whole portfolio, this whole account right now is just on fire, and I'm really proud of myself for just setting this up and just letting this sit. And I can't wait to look at this towards the end of the year. Towards the end of the year, what would this look like? Would this be at around $600? Like, just what happened? But Reality Income has been doing really well. My average share price $51. That's not too bad, but it's really been trending back up. And that's my M1 Finance account in a nutshell. I'm going to try to make this video really short. Everything again, I just want to say it. Everything in this account pays a monthly dividend. So I'm not concerned about, hey, if people are selling off, if are your stocks going down, hey, how you doing? I get told this a lot, everybody's messaging me on social media saying, how you feeling, when the markets are going down and, the Dow Jones goes down by 500 points. I'm doing just fine. I'm doing just fine because I know that these stocks are going to pay me some great dividends. And, I'm not looking, I'm as an investor, your goal is not to look at what's happening right now. You want to look at what's happening in the future. You want to say to yourself, okay, listen, I'm in it for the long term. 50 years from now, what is this Roth IRA going to look like after 50 years of compound investing, of those dividends just compounding over and over again every single month for the next 50 years. That's the question you should be asking yourself when you start investing and you start buying stocks, and you start just don't buy stocks. Just don't look at stocks and say, you know what, I want to get on a train. Just because the spike is going up, I want to jump on that train. Like this is the reason why I sold off when I looked at my Robinhood portfolio and I said, I'm selling off everything. I'm going to sell off everything because everything got so high. Guys, everything got so high. Apple's hitting new highs. Costco is hitting new highs. Everything's hitting new highs. Visa, everything's hitting new highs. And, don't be afraid to sell off. Don't be afraid to lock in profits and put that money into a stock that's on sale, guys. I'm talking about stocks that are down 10%, 15%. Look at 3M. Look at 3M. They are down. I think I was looking at them the other day. A stock that has no business being down, some 17% in a bullish market. 3M down 17% in a bullish market. That's a buy point, guys. I looked at that the other day. I wish I had more money to throw into my Robinhood account so I could buy that stock. You look at stocks like AT&T down 10%. Johnson & Johnson they're down 17% from all-time highs. I love Johnson & Johnson. So guys, do the research. Do the research. Look at stocks. Look at buying points, and just say to yourself, okay, what am I doing? Am I chasing a stock? Am I getting in at a great average cost? What am I doing to increase my odds of making more money? All right, so guys, that's going to do it. I just really wanted to just go on ahead and quickly talk about what my Roth IRA is doing and how the markets have been treating me. And I'll see you guys next time.